right, good morning, everybody. My name is Clayton, and welcome to my YouTube page, Blackwing Trading. This is Friday Morning Live, where you will see pre-market analysis. You'll see some live trades on here, and my goal is to show you that trading is attainable for regular people like you and me. Nothing is paid for on this page. Everything is free. We also have classes, trading education on futures, just to in the hopes of getting everybody on to show you that this is something that the regular purchase can do, and you can supplement your income and make good income if you take this trading journey. So this is a futures trading channel. So that's what you'll see me doing on this channel. All right. If you're in the chat, just let me know you're on by saying good morning. Joey, I see you. Thank you for jumping on, brother. If you're on, just let me know you're on. I love to see your interaction. Get into the chat and say, hey, good morning, I'm on. Good morning, my arm. I appreciate you being on this stream. All right, I want to get directly into the charts since we're up. There's a lot of things been happening overnight and all through this week with the market. So I have the larger time frame up right now, so you can see it. This is the 4-hour chart for the S&P 500 futures. And you can see this is, I'm giving a picture of the whole month right now. So you can kind of get an idea. It's a little bit more than a month, but I want to talk about the month of July so you can kind of get a picture of what's been happening this month. All right. So first thing I always do is talk about levels, right? Price action levels are one of the most important things that you can learn in trading in price action levels. And so we look at a couple of key levels that we have. First, we have resistance levels. So you can see here, I have this red rectangle up here. And this is near the 6330 range, 6330 on the S&P futures. And how you determine a resistance level, if you see trading up to that point and then it rejects and goes back down and it goes back up to that point again and rejects and goes back down and rejects and goes back down, that's what we call a resistance level. And so here you can see this is right in the beginning of right in the beginning of July. You can see that it traded up here to about 63.32, and then it retracted, came back, fell down a little bit, and then eventually traded back up here again about a week ago, and then came back down, and then traded back up here again. So you can see that area has been tested 3 times, and then now though, this week is interesting. Actually, happening yesterday is broken through that level. And we're actually trading all-time highs again. So the market liked a couple of things that happened this week. We had the inflation data come out, CPI and PPI, the consumer price index, and then the producer price index. Those are the measures of inflation, and we can tell what's the inflation numbers for goods and services. So the CPI was actually higher. It went up faster than it's been at any point this year, and it's landed at 2.7. But the PPI came in line. That's the producer price index, cost of goods and services to produce the things that we need in the country. And so that was a little bit lower. So that was a good surprise for the market, and they liked that. And then there was some job data, jobless claims came out, and we actually added a lot more jobs. And so they was actually beat expectations. And so the market liked that. I've been talking about that all throughout the streams. The analysts put out expectations. If the market beats it, if the numbers beat it, the market usually likes it and it trades higher. If it's below expectations, the market usually doesn't like that, and then the market trades lower. So that's why we're trading higher right now. So we broke through the 63.30 range, and we're trading higher right now. A couple of other areas I want to point out. You can see the second line. This is the 63.10 area. This is also an area that has been touched a couple of times. You can see here. At the beginning of the month, it touched here, came back up again on this day, came back again and hit this line again, came down, and we can see it hitting a couple of times on this day. You can see it hitting again on this day and then here as well. And then it came back up here again 2 days ago, and then it shot through it yesterday. And so the 63.10, 63.05, 63.10 area is also a resistance area where it's tested that level as well, a secondary resistance area. And then the last one I want to point out to you, the green line I have, that's what we call a support area. So whenever it went up to the 63.30s and then pull back. You can see it pulling back to this point. We can see it here happening, and then we see it fell a little bit below it, a little bit lower, but came up and tested it, and then it traded within this range in the green area. And then it went up again high, and came back down to the 62.70 area. That's the supply area. And then it went up high again. You can see that. And then it came back down again to the 62.70 area. And then it traded up higher. So 62.70 is a support area for the market right now. This is very important. I can't stress the importance of recognizing price action, because once you, and I usually do this on the weekends, and I'm looking at this throughout the week as well. But once you recognize these areas where the market is trading, it helps you time your entries and exits in the market. What do I mean by that? If the market is close to this area, you might not want to go long. You might want to go short, because it's probably going to reject that area unless it has some type of catalyst to push it through, and then it's going to go back down. Or if you don't want to go short, you want to go long, maybe you just wait till it hits that's support area, 62.70, and then when it hits that area, then you go long, and then you ride it back all the way up to the next resistance area. So when you see price action, it gives you just greater confirmation of what the market is doing, and then you can say, okay, I'm going to take my trade here. Or I'm going to come out here. Maybe you got in a trade somewhere in between here, but you say, hey, I got all the way up to 63.10, and then I'm going to take profits at 63.10. This is how we plan trades out. And it's better than just kind of jumping in and out. I used to do this a lot when I first started trading. I would just jump in and out looking at candles. But now when you come back and you can see the price action, you have a better chance of getting in and out at the right time, and you have greater success. So make sure you pay attention to that. So I did this on a 4-hour chart. This is a larger chart. And this to make it a little bit bigger so y'all can see these areas here. But, we can take it down to the smaller levels as well. Take it to the 1-hour chart, and you can just see more price action around these levels that I talked about. Trading at these areas, pulling back into these supply zones, and then trading up into the resistance area, pulling back again to the support area, and how the trading works out. And then the same thing, we go down to, like a 15-minute chart on a smaller level. It's the same thing. And this is over the past couple of days. And this is looking at the 15-minute chart. We can see trading within these resistance areas and breaking through them and then pushing up. So the all-time high that the market made overnight was 63.57. 63.57. So we're in the all-time highs now. And the market is trading in that area. So when we're trading in all-time highs, I'm usually very cautious, because we're in what we call price discovery. So price discovery is when, the market is kind of trading to see what area it's going to trade to, but you don't know how high it's going to go. It can go 5 points high, it can go 30 points high. You don't know what it's going to do. So I'm usually very reluctant to take big trades when it's, at all-time highs. And so I'm going to actually be trading a little bit smaller today, because I took a trade this morning. You can see on my trading screen, I can go to my regular trading screen. I took a trade this morning, and I'm actually now about $900 up. So I took a great trade this morning, caught it at the bottom, and then rolled it up all the way up. I went long down here around 63.42. Traded all the way up to 63.50 with 3 contracts, made $937. And so normally on a day like this, to be honest with you, I will be done trading. I'm not going to trade anymore, because there's no use of messing up a good thing, right? But I do want to show you something on today. So on my last trading, my last training session on Sunday nights, if you're not jumping on, you need to jump on Sunday nights to look at my Futures 101 series. I talked about the difference between the minis and the micros. Now, I normally trade the minis, which are a tenth of the standard contract. And on the S&P 500 futures, each point is worth $50 on the minis. But on the micros, each point is worth 5 points. Why am I mentioning that? And why am I going to trade the micros this morning? Because if you're new to trading, Listen, it's an excellent thing to get into the micros instead of the minis, because those things are only moving, the micros are only moving at 5 points. It's the same chart. It's the same thing and everything. It's just the contract size is smaller. So you're not looking at a different chart. You're still looking at the S&P 500 futures, or if you want to trade the NASDAQ, you're still looking at the NASDAQ futures, except you're looking at, you're trading a reduced contract size. And so trading the micros, you're only moving at $5 a point. So if you're new to trading, listen, perfect way to get into trading. So you can get used to how it moves. And then when you're ready to scale up, you can scale up. That's exactly what I did when I started trading futures. I started with the micros and then I went up to the minis. And so since I already have a great trade going on today, I'm going to trade the micros just so you can see how they move. So you can see that you can see the price difference in them. But you can still make great money if you place great trades starting with those micros. You can still make good money. But the key point that you should be looking at if you're new to trading is that you're trying to get the process versus making the money. I know that sounds kind of counterintuitive, but you want to learn the process. You want to learn how to trade. You want to look at the charts. You want to see how charts move. You want to, perfect the strategy. On this channel, I only use a 15-minute opening range break. So you want to pay attention to those things and perfect those things, because that's what's going to make you a great trader. So that's what I'm be doing today, trading on the micros. And so I'm going to go back to the other chart. And if you got any questions about that, just hit me up in the chat. Please just hit me up in the chat and I'll make sure I get to your question. But we can see right now that we got some strong momentum pushing up. Let me go back to the 5-minute chart. And it looked like it wants to press up through those highs again. Got some strong buying pressure going in right now. But we set for our strategy. We're just going to, wait till we do our 15-minute opening range break. And then we'll take a trade on either it's on the upside or the downside, because you don't know what the market is going to do. All right, so another thing I want to point out to you while we're waiting, there's a couple of things that's happening also in financial calendar. So this is the earnings season. So what earnings season is that, so every quarter, all publicly traded companies have to report their earnings, their forward guidance for investors and shareholders to see, and that becomes public knowledge. And so it's a gauge of seeing what the strength of the market is, because every publicly traded companies, they're going to report what their earnings are, and they're going to report whether they lost money, they made money, if they made versus their forecast. And then they usually put out forward guidance of, hey, this is what we think we're going to do in the next quarter. This is what we're going to do for the rest of the year. And so this is the beginning of the earnings season. And so is removed. So we're actually going into the third quarter, but this is from the previous second quarter earnings. So the earnings season goes in cycles. This is the financial markets earnings season. I mean, the financial companies earnings season. So like the banks, credit card companies and stuff like that, they usually start earnings season first. And so a couple of, bigger names, Charles Schwab, who owns Thinkorswim now, they have their earnings today. That's the opening bell. The market is open. And then American Express has their earnings today as well. We had JP Morgan present their earnings. They made a lot of money, like $4 billion or some crazy like that over the second quarter. So the financial markets are doing well. That's another reason why the markets are trading higher, because companies are reporting good earnings. That means that they're not really feeling the pinch as much as they may anticipate it. And so now, the market likes that good CPI, good PPI. Well, not good CPI, but good PPI. Okay, earnings, not bad on the jobs report. So the market is trading higher right now. Looks like we got a strong pullback on this first candle. I would expect that because we're near those all-time highs. People are probably going to take some profits. All right, let's get some music going. Yeah, this is some crazy swings of volatility. So again, if you're new to trading and you're on the stream, I just want to point out to you the classes that I teach, Futures Trading 101. I teach them every Sunday. So this Sunday at 6 p.m., I'm going to teach inside a futures contract. And we're going to look at the mechanics of the futures contract so you know what you're looking at and what a futures contract is telling you. We're going to look at some of those standardized characteristics of a futures contract. And my goal is that from we finish this class, you should be able to look at any futures contract and know what date it's trading on. Also, point you back to the website, to the CME Group website, so you can look at all the specifications and all that stuff, so you know exactly what you're trading. I'm just putting down the base of knowledge of what you need to do to trade futures. You know, I had to find this all out myself, and so what I wanted to do was just to put it succinctly in some videos so you can get it all in one place. And my goal in this Futures Trading 101 series is to take you from, complete newbie to futures trading to taking your first trade. Are you going to be a great trader on your first trade? No, you're not, especially if you had to get used to trading. But what I want to do is give you that base of knowledge and show you some things that I had to learn over time so that it can speed up your learning process and you can get towards trading. But so this Sunday, episode 3, 6 p.m., we're going to be looking at inside a futures contract, to see all the standardized characteristics of a futures contract. If you missed any of the other previous ones, I have a playlist on this YouTube page called Futures Trading 101. And so all the lessons are already there. Episode 1 is there. Episode 2 is already there as well. And you can go back and review those things and look at them or maybe you looked at them and you missed some things and you want to kind of review. They're there so you can view all that you want. And if you got any questions, you can always, put it in the comments and I'll make sure I respond to you as quick as possible. All right, that's that first candle. Looked like it went, that was a pretty decent range from 63.45 to 63.52 and some change, 25. So you see some big candle reversal movement. So you had a big push up right before the open, and then you had a big push down right at the open, and now it looks like it's pushing up again. So when you see that, and then you have the same thing here, you had a push up and then you had a push down. Usually when I see that, that's an indicator to me that there's going to be some choppy trading. And this is what we mean by choppy trading, where it goes up, it goes down, it goes up, it goes down, and it's in a particular range. And so sometimes it's easy to lose money during that time because it's just trading within a particular range. You think it's going to go up, then it doesn't go up, then it goes back down, or you think it's going to go down and then boom, it pops right back up. And it knocks you out. If you have your stop losses in, if you're trading well, it can knock you out. It looks like it's pulling back though. It hit this area again right here. It's respecting this 63.45.5. I have a line drawn here. This was the high for yesterday. So the market usually remembers those price levels. And so I have that drawn on here. And it looks like it's pulling back somewhere near that area. Yeah, it's pulling back a little bit. Just review the strategy that I trade. I trade one strategy, pretty much the opening range break. I do a 15-minute opening range break, but you can do a 5-minute opening range break. You can do a 30-minute opening range break. Either case, what you do is you allow it to trade. So right now the market is just open. This is the first 5-minute candle. I have it set on my charts. This is a 5-minute candle. So this is 5 minutes of price action. Each one of these candles are 5 minutes. And so we're in the second candle. So that'll be 10 minutes after this was done. And then I wait for one more candle. That'll be 15 minutes. And what I do is I block off the range of trading within those 15 minutes. And what I want to do is take a trade where it either goes definitively above that or it goes below that. And so I draw that box out. And then when it gets to above it, for instance, or below it, what I do is wait for another 5-minute confirmation candle. Because like I said, sometimes the market can fool you. It can go down and then it'll come back up, especially if it's near some key levels. Like right now, even though it might drop below this, is near this key level, the 63.45, which is the high for yesterday. So I'll be looking intently at this line and see what it does around there, because it could bounce off it like it's doing now. You know, it could go, slightly below it and then come right back up, and then trade up. And so you want to pay attention to that. So I wait for a 5-minute confirmation candle to say, okay, all right, this is the direction that it's going. Then I go short if it's on the downside, or I go high, on the upside. And then I'm also knowing where I want to get out. And so for instance, today, if it pops above this range, the top side is 63.52. Now the high was 63.57. So not much on the top side. And then, like I said, we're trading in all-time highs today. So I'm going to be cautious on how far I'm going to let it go up. Like I probably would take a trade and really maybe take profits at 63.57 or something like that. Maybe let it go up to see if it goes up to 63.60. And then I'm just going to be cautious on how high I let it go. Because you don't know how high it can do when it's doing price discovery and opening range break. Now, on the downside, there's a lot more this could do on the downside. Like if I go out to scale this out again, we can see it could drop down to the 63.30, 35 area. It could drop below that. Could go to the pre-market low. So the pre-market low is right around about 63.40. I could draw a line right there at 63.40. You can see this is where it went to on the low. I'm actually going to draw a line here. Make this one a dotted line. All right, so it could pull back there. It could pull back, to the 63.30 area. I mean, it could exhaust and even pull lower. So a lot more room to the downside than you have to the upside, where it's at now in the all-time highs. All right, so we're on our third candle. Let me get ready to draw this box here. So this is how I do on Thinkorswim, the other trading platforms, but this is how I do it so I can see it visually. My 15-minute opening range break area. I take a box and I take it to the low. So you can see it covers the high and the low. And let me edit those properties. And so I change the time so it covers the entire day. This is going to make this box extend out all the way. And then I have it, covering the opening as well. Change that to 75 just so it's in line. And there we go. So we're on that third candle. It's about 841 right now. And this is the caution area. So what I mean by the caution area, I'm going to make that a little bit bigger. This is the range area where, this is the 15-minute opening range break. This is the top side of this range. This is the bottom side of this range. And so anything within here, I usually don't want to take any trades. I want to take a trade if it goes above this box or if it goes below this box, because usually it's going to continue to trend down in that area for a good trade, either on the bottom side or the top side. And with this, you let the market tell you what it's going to do. Like, I don't decide where it's going to be. I just pay attention to what it's doing. And as I mentioned to y'all earlier, I usually take I'll wait for a 5-minute confirmation candle when it breaks, so I can make sure that direction is decidedly down or either decidedly up. And then I'll take the trade there. Many different trading platforms have, good drawing tools. Part of trading well is also setting up your workspace the way that you need it, so that you are seeing the things that you want to see doing trading. Okay, so it's starting to make its way down a little bit here. So it looks like this one actually may be exhausted, and it may go down to the downside for a little bit. You can see that it's still respecting this high from yesterday, though, 63.45.5. It trades down a little bit below it, then it comes back up. Same thing here. It trades down maybe a little bit below it, comes back up. So it's respecting this line right now. Price action is one of the most important things that you can learn as a trader. I didn't start learning this till a little bit later in trading. The market respects certain price levels. And you have to think about what's happening during trading. People are buying and selling at certain price levels. And so, you have long-term traders, short-term traders. People are getting in at certain price levels, and that's where they're trading. And so you want to pay attention to those levels, because the market respects those levels. It returns back to them. See, like now it's pushing back up. It's within this range. Now, even though I am going to wait for the market to tell me what it's going to do, to take a trade, I probably would want to more so take probably a short side trade, just because you have more room to the downside than you have upside. But like I say, you never know. It may test some all-time highs and keep going higher on today. And so that's something that you want to pay attention to. Right now it's below VWAP and below the 9 EMA. So that lets you know that the sellers are in control right now. Strong push up. Okay, it just took VWAP. So it's trading up strong now. Still within that caution area though. Thank you if you joined the stream. I appreciate y'all who joined the stream faithfully. Please recommend this to somebody that you know who may be interested in trading. Like I say, I'm on here every Friday showing you the good and bad and the ugly of trading. Trading futures has a lot of advantages. I started out trading options. One of the things I like about futures is, particularly like what I did this morning. I got up a little bit earlier, took a trade, and I was done trading actually by around about 8 o'clock. Done trading. So trading futures is one of those things that even if you have a full-time job, if you want to, you can trade futures like early morning. Futures trade all throughout the night because people all around the world are trading within the futures market. And so that's one of the advantages of trading futures. So if you have a full-time job, no worries. You could get up early in the morning. This is if you really want it. You can get up early in the morning, keep your daytime job, get up early in the morning, maybe 6 in the morning, you start looking at the charts, getting ready. And maybe you need to be out of the house by 8:30. So maybe get up early and you're ready. You're sitting down at your desk like 6:30 in the morning, and you can, trade futures early in the morning for about 2 hours. Or maybe you need to be out of the house by 9, or maybe you need to be at work by 9. You can be done trading at 8 o'clock, and then be out the door. May have some great trades, and then you can go on to your regular day job. And so it's one of the great things about futures. Okay, looks like it's pushing up now. But it's still in that caution area. Like I said, this is the area that you normally I don't like to trade in for the 15-minute opening range break. Whatever that area is, I want to make sure it breaks above that or below it, trending. Still got some morning volatility going on. But it is trading higher now. I do know some people, you can adjust this opening range break. I do know some people like online that do like 5-minute opening range break. So they let the range be set for the first 5-minute candle, and then they take a trade. Now, one of the things you have to modify on that is your time that you're in the trade. So the people that I see that are doing like 5-minute opening range breaks, they're basically taking quick scalps, 1 minute, 2 minutes in the trade, and they're done. I do the 15-minute open range break and then wait a little bit because usually I'm in the trade a little bit longer, just because I want to get a bigger move. But you could do quick scalps, 1 minute, 2 minute scalp with a 5-minute open range break, and that can work for you as well. Some people have been moving out, and I've kind of been doing this in practice to like about a 30-minute opening range break. Matter of fact, we have our 15 minutes drawn out, but it's still not within our parameters. And so you could wait 30 minutes and then say, okay, at the end of 30 minutes, I'm going to take a trade. The market changes up a little bit each day. And so it might take longer, to be able to wait for all the volatility and stuff to set out and then for the trend to emerge, whether the trend is up or the trend is down. Oh, wow. That was a strong candle all the way down. I don't know what happened there. Sometimes the market does that to you. Let me see. The only data that's coming out today is the housing starts, but that already happened at 7:30. So I don't know why it just took this big dip down like that. That was definitely a strong red candle down. And it went down all the way to like 63.42 and then popped back up a little bit. And that's a high frequency trading by computers. I can say just looking for, a possible trade opportunity, but, in full transparency, I say I made $930 this morning already. The computer would be off and I'll be gone doing the rest of my day because I've already made a good trade. So, but I am going to try to take a good trade according to the strategy, not going to force anything. So you can see how the micros move. If you're on and you get any value out of this video, go ahead and hit that like button for me. Hit that like button if you're getting any value out of this video. It helps the algorithm, helps the channel, and your engagement is valued as well. All right, back to my trading screen. And like I am a funded trader with Top Step. This is my normal trading screen where I'm actually doing my executions at. But I do my charting on Thinkorswim, and so that's the chart that you'll see a lot of with me drawing the lines on there. Support and resistance, our supply and demand zones. You'll see that on Thinkorswim because that's where I'm drawing it. So I'm looking at both of those screens, but I'm taking my trades on Top Step. Yeah, Joy. Yeah, sideways. There's a lot of sideways choppy trading. And this is you see this sideways choppy trading sometimes when you get into these all-time highs, because the market is unsure of really what it wants to do, right? Once it hits an all-time high, your stocks and all these things of value, at their highest levels. And then, people are making decisions. They're like, okay, do I go ahead and take some money off the table right now and sell it so we can capitalize on these gains, realize these gains, because they may have got in, a couple of days ago, or they may be trading, day traders like us. And then once it hits these high levels, people want to sell and they want to take their money out of the market. And so that when they start selling, that causes the market to drop. But then you have another round of buyers that say, hey, we want to push this thing higher. And so you have this struggle, and we call that chop in trading. And so this is what you see on the screen right now. Chop is when you have one green candle going up and then you have another red candle matching it. Then, okay, this looked like it was going to go down. And then now we got the strong green candle going up. And now we thought this was going to go up, but then we had the strong red candle going back down again. And then now we got a red candle, but it may, you may have a green candle after this. And this is why I really like the 15-minute opening range break. Shameless plug for the way that I trade, but this is my strategy that I've seen a lot of success in, because as long as it's kind of chopping back and forth from this range, I just don't take the trade. Because you can see how you can get faked out many times. You might get into the trade, say, okay, it's going up now. And then next thing you know, it reverses on you and pulls all the way back. And now you're mad because, either stops you out or you get knocked out of the trade, or you start losing. And then you're like, okay, what is the market doing? Well, this is by design. This is computers trading right here. This is the algorithms for big institutional firms and stuff like that. There's an estimate that about 80 to 85% of trading right now is done by computers and algorithms and AI. So these computers can trade way faster than you and I can. Their reaction time is a lot quicker. And so they're trading. That's why you'll see some trading up and then you'll see it flush all the way back down. And then you see it trade back up again, because the computers are driving that. And so, they're making money in those short time frames because they're trading, high frequency within very short, 10 seconds, 5 seconds, 20 seconds within a trade, take it all the way up. Okay, all right, now let's sell it all the way back down. And they're making money like that. Well, most human beings, we don't trade that fast. And so when you see this chop like this, it's best. This is just me. You might be a short-term scalper and you might like to do this. But for me, I'm not very good at it. And so, I like to allow all this stuff to settle out, because sooner or later the chop stops and then one direction is picked. Either it's going to be up or it's going to be down, or it's a variation of both. And what I mean by that is, okay, it's chopping, then it starts to go down for a while. And you have a very significant move down. And then, it may say, okay, everybody goes to lunch, they come back, and then they say, all right, now we're going to buy back up. And then you can see a strong move up. But you can catch those trends after it gets out of the opening range break. And that's kind of what I'm expecting today, the way that it's showing. Wow. So y'all see that, right? That candle went straight up, down and up. And I don't know why I did that. There's no news. I could check to see if there's any news or something happening, but I don't think there's any news that's driving this. So Netflix reported some earnings. I guess we could look at that so we can get an idea with Netflix. That's one thing that's driving the market. Yeah, so Netflix is our favorite streaming company. They reported earnings and fell down pretty hard this morning. They were up at $12.46. That's $1,246. And they fell about $30 once they reported their earnings. And so that must have meant that their earnings wasn't that good. Okay. Back at the futures. And that's a crazy candle. That went all the way up to 63.57 and down within that one candle to 63.42. And it was instantaneous. It was just happened right there. Boom. Chop, choppy trading. And I will tell you, if you see this kind of stuff when you're trading, you really don't need to trade that, because you can see it looked like it was going down and all of a sudden it just reversed and went straight up in the air. You could get lucky, and place a trade and you get lucky, but it's really not trading skill, it's luck. Because if it reverses on you, it does something, you didn't do that by trading skill. It just happened by luck. And I've been lucky a couple times on trading before, but that's not skill. That would be luck.
Just $9.99 online. Last time, our fans got exactly what they wanted. Pan pizza with barbecue sauce, mushroom.
Yeah, that's interesting to see that. If we go to the NASDAQ, this is the top 100 like tech companies and stuff on the NASDAQ. It's trading in the same way. Most of these futures, so most of the times they move in sync. Sometimes they diverge a little bit depending on what's going on in the markets. But you can see that the NASDAQ is below VWAP and below the 9 exponential moving average. So it's trading a little bit weaker. And the Russell 2000, which is the 2,000 small cap companies, you can see it's actually been trading down. It did have that same big push up on the futures, but then it pulled down, but it's below VWAP and the 9 exponential moving average as well. This almost makes me think there was a quick pop before it actually, a quick pop before it's about to go down. Yeah, I don't know. We can go back to the S&P 500 futures. Yeah, this is definitely something I wouldn't be trading where they're doing all this crazy chop like this. That's a monster candle. That's a 10-point move up and down that quickly. Okay, it looked like it's breaking on the bottom side of that. Coming outside the range. Now, according to what I said on the opening range break, you can see it going down the bottom side. So the tendency will be think, okay, now it's going to go to the bottom side, but you want to wait for a 5-minute confirmation. So once it's sustained below that, you want to see a 5-minute confirmation below. And I wouldn't even count this candle because it just kind of went down, but it didn't close below the range. So I wouldn't even count that candle. All right, so it's somebody that's a strong candle down now. Say this is a 5-minute candle. I like to trade on the 5-minute range. You can change your ranges on the or your candles on the chart depending on like what you like to trade. Like I could take this to a 1 minute. All it is you're going to see more candles up and down. So this is the 1 minute chart. Same chart, just up, down, up, down, up, down. So you have each one of these candles represent 1 minute of price action. And so you can see you have more candles. And you could trade on the 1 minute. So if we're on the 1 minute chart, this would be this will satisfy pretty much what you needed for the opening range break, because it's below it and you're on another confirmation candle, which is kind of below it, but you will wait to see. So this one closed below the range, and then now you got another one that's going below, but you can see it pop back up. So I don't like to trade on a 1 minute candle because you have way too much price action within 1 minute. I have traded on 2 minute before, but I like the 5 minute because I think that gives you stability. But it all depends on what you do. Now, if you're a scalper, like we were talking about, if you did like a 5 minute opening range break and you're a scalper, well, you might want to trade on a 1 minute chart because you're only looking to be in that trade for like 1 minute, 30 seconds or whatever. So you would trade quickly like that, and you would trade on a different type of chart. And I don't trade that quick. Like I say, I'm not a scalper, so I really don't need to be on a 1 minute chart. But I'm going to go back to that 1 minute chart so y'all can see what I'm talking about there. So if we go to the 1 minute chart and you did like a 5 minute open range break, like we talked about. So we count these 1, 2, 3, 4, 5. You would basically be right here is the bottom of your range. And you could have took some trades. You could have took some trades down. You could have took a trade down. This could have been your confirmation candle. Then you could have took this trade for a minute from 63.46 down to about 63.44. That could have been a quick trade, but then it would have came back up on you. So same thing on, well, actually that went below that, so you couldn't have took that. 1, 2, 3, 4, 5. I'm sorry. Yeah, this would have been your range right here. So you could have did the same thing right here, took a trade down, then when it came back up on you. And this was some chop, so you probably wouldn't want to do that. But now it's within an area where you could trade. So I'm going to go back to the 5 minute. All right, so this is the first candle that's possibly going to be sustained below, close below. I'm looking for the close below this 15 minute open range break. And what I mean close below, so when it moves to the next candle, and the closing price is below that range. Like this one didn't do that. The one before it closed actually within the range. It went down within there and actually went up above that, but it closed right here, which is just above the range. And so this one closed below. All right, so this would be my 5 minute confirmation candle. This next candle would be the 5 minute confirmation candle to make sure that it's still going down. Yeah, that looks like it's going to go down. All right, so I'm going to take a trade on the micros. If it stops me out, it stops me out. It won't be that much. But looks like I'm going to go ahead and take a trade on that. So let me go over to my other screen. And I want to go short somewhere around about 63.43. In the micros, I'm just going to go with 3 contracts. Oh yeah, it's pressing down pretty good now. All right, so you have the depth of market chart that's different for trading futures. It's just outside the screen. You can't see it, but I use this to trade for my entry, so I know exactly where it's going to go in. And so I have it at 63.42. I'm going to see if it comes up to 63.42, and then
Order filled.
all right. So the order is filled, and it has my normal risk parameters. And so I have my risk parameters already set to risk 150 to gain like 450, 500. So obviously I'm not trying to risk that much on this. And so what I'm going to do is just bring it actually up to the top of this candle, which is $30. So I'm only going to risk $30 on this. And I'm trying to make, actually I want to bring this back up. I'm not trying to make, I'm going to close that out. I'm not trying to make, I'm just going to do it for $60. And so I'm going to drag this down to where it gets to about 60. Okay, so that's what I'm trying to go to. So I'm risking $30 to make $60. And that's a 2-to-1 risk to reward. I have a class that I'm going to be teaching on Sundays talking about risk to reward and how you manage that. But we'll see how it works out. So I'm risking $30 to make $60. It's 2-to-1 risk to reward. You always want to calculate your risk to reward because you want to know how much you're risking for how much you're going to gain. And you never want to invert it. You don't want to risk $100 to make $25. And that doesn't make sense. Nor do you want to risk, anything less than, you want to aim for at least a 1.5 or 2. It looks like hopefully it goes down. Yeah, so it's made that definitive move down. And we'll just see if we get our feel here. Now, trading the minis, I would be risking 300 to make 600 because it's 10 times this, but this is the micros. So I'm risking $30 to make $60. And so you can see how this is much more friendly. And what I'm going to do now is actually move my wrist like I normally would. I would move my wrist up. So just in case it reverses on me, I don't lose any money. So no matter what happens right now, if it reverses on me, I'm going to still make $15.
Order filled.
Okay, so it reversed on me. I made $15. It hit that and then it came back. We'll see if it comes up or it goes down, and that's fine. Because this is the process trading. I know that's not sexy, not a bunch of money, but if you're new to trading, you need to trade these micros. So you're only risking $30 and $20 to make $60 or $50. Instead of, $150, to make, risking $300 to make $600, start off smaller. So it pushed down. Actually, probably should have left it where it was, but it is what it is. It's my process. Once it gets to a certain point, I move my wrist down so that I don't lose. And then, and then if it reverses on me, I still make some money. So there's no risk in the trade. All right, so this you can see it's still going down now. So it's making that definitive move down. And if I had already made money, I probably would be taking, riding that down a little bit further. But, it could have been a good trade. If it was the normals, this would have been making $150 versus $15. And so I'd have been fine with making $150, but you know, when it pushed down further like that, it would have been a little bit more money. All right, well, I don't think I really need to stay in here any longer because I already made some money. I made $900 earlier, made $15 on that quick trade. And this is probably on a trend down. Now, let's talk about these areas before I get off. Okay, so the next area you can see, let me transfer over to Thinkorswim, is this red area here, which is 60. This is the previous resistance area, 630, 6330, 6335. Now it's about to go down because it broke the low. It broke the low for the pre-market low, which is this line that we drew here, which is at 6340. And now it's going below that. So it's probably going to go somewhere up in here, and it may bounce off 6330. I would look for it to see if it's going to bounce off 6330. Now, talking about planning your trades, maybe you don't feel comfortable going short, but what you could do here is you could wait until it bounces off 6330. If it bounces off that, and if it decides to come back up, you know, you can go long here and then ride it back up. So that's how this is why these support and resistance areas, supply and demand zones are so important, because it helps you plan your entry. You could say, all right, I'm going to wait and see if it enters, if it bounces off 6330 and you go long there. Or if it goes, say it goes definitively below that, and then you say, okay, all right, the next area is about 6320 or even 6315. And we're going to see if it's going to bounce off that. If it does, you go long and then you ride it up. But right now you can see it just went into that area and it kind of bounced up a little bit. It went down into 6334 and then it bounced up. So that lets you know that it recognizes, okay, this is a previous resistance area. And there's some price action happening around there. Pay attention to these supply and demand zones. Yeah, it's kind of pulling up now. Yep, but I will be done for today. So I'm actually we've been on for maybe about 50 minutes. I'm going to go ahead and get ready to get off now. A couple of things I want to remind you of, though, is just make sure that you are tuning in. Make sure you are tuning in on Sunday evenings. On Sunday evenings, 6 o'clock, I'm going to be teaching a series of lessons called Futures Trading 101. I can't go into all these things while we're actually trading. I do talk about some of it. But listen, if you're new to trading and you want to get more details, please go to those lessons. Join me on Sundays at 6 p.m. on 6 p.m. And I'm going to be talking about these trading concepts. And then you'll see these concepts, and then you'll see me actually execute these things when we're trading, so you can have that base of knowledge. And then if you want to start your trading journey, all those lessons will be there that you can continue to refer to. You can view them as much as you want. And then you can look at it and say, okay, all right, okay, he was talking about this. And then you can correlate it to what I'm doing in live trading, so it can help you in your trading journey. So tune in on Sunday at 6 p.m. This lesson is just going to be episode 3, where we're talking about inside a futures contract, how they're standardized and what they do and all that good stuff. And so tune in again. Thank you so much for joining the stream. Please like and subscribe if you haven't already done it. Refer this to somebody else if they're new to trading, and you can get them starting on their trading journey as well. Hopefully I see you on Sunday.